What's up, everybody? It is Monday, February 27th. We're almost into March. Springtime, right? Let's talk about what happened today. Believe it or not, folks, you are being tested. Tested as to your emotional stability, your internal strength, your emotional strength. So we had a good day. We started out, it was a good day. The market was up like over 300 points. Then there were comments, Fed officials, hey, we got to keep it higher for longer, meaning interest rates. Market came down, and so we ended up positive, but not as positive as what it was. Does that bother you? Does that affect you? Does that make you feel bad? Does that change your attitude for the day? I don't know. Here's the thing you have to remember. Okay? This is all part of a process, and it's not easy to be an investor, especially like if your behavior is to look at the market every day or every hour or whatever. Here's what I've been trying to tell you guys, and here's the only thing that really counts, is that fiscal flows are rising, and they are rising in a very substantial, rapid rate. And why do I keep saying this? I keep saying this because this is the first derivative of everything. I'm trying to give you guys, like, when I talk about navigation, when I talk about things you should be like focusing on to keep your mind off of these daily fluctuations. This is the thing. I don't know how much more like adamant I could be about this. I don't know how much more I could be more forceful about this. But this is the thing. Now, I know that we're coming up to a period, and I've been telling you guys. By the way, remember I said when February 15th was going to be the peak in the fiscal flows? Actually, it wasn't. Fiscal flows have been they've been increasing, and that to me was a surprise. Even though I was prepared for a peak in the fiscal flows in February 15th, but okay. And I think I've said that before, and I know for sure my subscribers know this, but we're still gonna have tax strains in March and April. And that's no fun. I know that's no fun. We gotta write those checks. We gotta send those checks to the government. And that's gonna be negative. But remember, here's the thing. Those are temporary reductions. We're in a really, really good environment right now where net positive flows, they're increasing. And you want to be buying into these dips, okay? Because these are, what can I say? I mean, these dips are based on emotional reaction by people who are reading the news, they're reading the headlines, whatever. They're reading, statements by Fed officials or whatever. But all of these things, especially with regard to interest rates, not only, I don't want to say it's irrelevant, but it is so wrong in its understanding, in the general understanding. I just sent out my report this week, again, talked about like, there's been like 200 billion in additional fiscal flows based on the interest income transfers, like checks going out. Like if the government was going to announce we're going to send out 200 billion in checks and that's just the beginning, the market would be going crazy. But it's because of the lack of understanding, the lack of, forget about the lack of understanding. It's because of the mindset. It's the mindset. It's this monetarism pounded in over and over and over again that's causing people to behave in a certain way. And it's actually for somebody who understands, and I'm not just talking about me, I'm just talking about like for anyone who understands and they see the reaction, it's almost like, I don't know what, it's like a self-defeating thing. Frankly, I love it. That's not to say I like to watch the market go down because of bad understanding or false understanding or lack of understanding. I don't like that. But it gives me opportunity. That's the thing. And that opportunity, it's like, look, I keep coming back to the Warren Buffett example. And he's the best example because like there's nobody close to Warren Buffett. No hedge fund manager, no short-term trader, no, whatever. Close to Warren Buffett. He's like number 5 on the all-time wealth list. Never created anything, never built a business, never discovered a new invention, never, developed a new product, just invested in stocks. How can you not look? But it's not only about how can you not look at what he did, but the mentality. And it's about growth. It's exploiting the growth function to your advantage. And he's got it. Totally. And this is what I'm trying to tell you guys. The government, the net flow, I don't want to say the government, maybe that will trigger some people, but we're talking about net flows near $7 trillion a year. Okay? That flows into profits, pockets. All right? The stock market is based on that. It's based on profits. It's based on, consumption. It's based on investment. All that stuff. It requires money. And all I'm telling you is that is happening. So, if you get upset or tired or depressed or angry because, look, today we're up 300, then we're up, 100 or 90, and that bothers you, don't. Think about the big picture. It's the big picture that's important. Everything is going to be okay. Build your wealth. Fucking seriously, build your wealth. Don't sell it short. Build your wealth for you and your family and your future. That's all I want to say. I love you all. Bye.